It's not working. Oh.
Recording in progress. Recording in progress. Recording in progress.
Good evening, good evening, good evening, good morning, depending on where you're logging in from. Welcome and thank you so much for taking your time off your busy schedule to join us as we unpack the investment solutions that are available for you as a Kenyan in the diaspora. My name is Milka Washira, Manager Diaspora Banking at Stanbic Bank, an expert in financial and beyond banking solutions for Kenyans based in the diaspora. I will be your host today, and I look forward to having an interactive and informative session with you. So karibuni sana. Before we start, I would like to introduce my colleagues, or rather I would like my colleagues to introduce themselves. as they tell us what they do in the bank and how this will go. Thank you.
Good day. Good day, our customers and our potential customers. My name is Christian Carrier. I am the head of investment services at Stanbic Bank, the asset management function, and I'm glad to be here with you. I'm a member of the Chartered Institute of Financial Analysts, Kenya, and also a member of the Chartered Institute of Securities and Investments in the UK. Pleasure to be here with you.
Thank you very much. So good morning, good afternoon, and good evening, wherever you've dialed in from. My name is Edward Mugo. I'm the digital manager for adoption in Stanbic Bank, Kenya. We deal in the retail solutions for the bank. So if you think about what we do for you guys is we are challenged or tasked to develop the products and services so that anywhere you are around the world, you can use them. A little bit about me, I'm a technologist. I love technology, and I'm very interested in where embodied AI is going. If you actually see me in my free time, I'm pretending to read some AI papers that I do not understand. Outside technology, I love football. As you can see, I'm much younger than I am. However, my team, that is Liverpool, has been giving me some stress and fun at the same time. Otherwise, welcome to the event, and hopefully we'll have a good day today.
Thank you very much, Edward, for bringing that angle, a personal angle. Before we start, maybe just in terms of introduction, I would want to introduce the bank. Who is Stanbic Bank? I know some of you are on the call and you do not know who we are. It's good for me to just mention that Stanbic Bank is a tier 1 bank in Kenya. We are registered and regulated by Central Bank, and we are part of the wider Standard Bank group. Standard Bank has been in operation for the last over 160 years. We are the largest bank in Africa in terms of assets, and we are present in over 20 countries in Africa. And we also have financial hubs in various cities within the world, all the way from New York all the way to Dubai. And we pride ourselves, our brand promise is that Africa is our home and we drive her growth. When we go local, Kenya is our home and we drive her growth. Additionally, we are here to discuss our diaspora banking proposition and why. You'd be asking yourself, why Stanbic Bank? And one of the things we pride ourselves in is that we have been able to look at all the aspects of your life as a client, and we're able to solution for you. We know that you're out there working, you're toiling so hard for your hard-earned money. Some of you have 2 or 3 jobs just to make ends meet. And we know you have family back home that you're taking care of. We are that institution that will give you financial solutions that enable you to bank home easily. You're able to bank back home. You're able to access while you're out there. We also understand that even as you work, you need to live. You need to create memories. You need to have a lifestyle. You need to live joyfully. And we have solutions that also help you to do that as a client. We are also cognizant of the fact that as you work and make some money, you'd want that money to work for you. How do you invest skillfully back home? And this webinar will dig deeper into this pillar that is very key to us. How do you make your money work for you? And the last one is planning wisely. And this is where we think once you have made that money, you're spending it and you're living joyfully, you still need to plan ahead. You need to think about the next generation. You need to ensure, you need to take care of any risk that would come to the investments that you have. And we are going to talk about all this today. Thank you. And maybe just as we start, I'd want to pose some questions. I'll pose some questions to my colleagues here. And one of the questions that I'd want to ask Christian, we know that Kenya is the 4th in terms of remittance recipient in Africa. We receive over $4 billion annually as a country. And we know very well that most of this money is going towards consumption. We want to change this dial so that our customers can invest some of this money, not just to spend it back home. How do we, what solutions do we have for Kenyans who are in the diaspora?
Thank you very much, Milka. And that's a very pertinent question. I think we need a mind shift from consumption into investments, and it's a very good session today that we shall unpack the options that we have to our listeners. So I have a slide in front of you which covers just basically 4 quadrants. There are a bit more than this, but I've tried to compress it for ease and your understanding, and I'll try to be very layman kind of way to present it. We techies in the finance sector are accustomed to jargons, and I'll try to avoid that. So before you can see the top left quadrant. We have a solution called money market and fixed income funds. So I will begin with that. What are these? So a money market fund is a type of investment that offers you as a client a reasonable return. It offers you liquidity, and when I speak about liquidity, this is the aspect of how fast it is you can convert that asset into cash whenever you need it. And also these are low risk, and therefore we consider this to be one of the safest areas of investments. They are also known as unit trust funds, okay? And other markets, they call them collective investment schemes. And I'll explain how these work. So a money market fund is a pool investment. When we say pool, it pools money from various investments, from various unit holders or clients. And this money is invested at one investment. And every day we attribute income to all those investors who have come into that pool. So we go out there as professional managers, we invest in the categories that are allowed by the Capital Markets Authority of Kenya. And once we have finished that, we take out the fees that are used to run the fund, and then we distribute the income in a ratio of every investor's contribution into that fund. So those are the money market funds. What do they invest in? Typically, they will invest in high quality bank deposits. They will invest in instruments we call treasury bills, and I'll come to that. They are at the bottom there. And other safe investments that we consider adequate for the risk profile of this fund. Ideally, money market funds should have a maturity of less than a year for the investments that they do, and therefore they have to be very liquid. And a key feature of this is the preservation of capital. So your 1 shilling in the money market fund should pretty much stay as the 1 shilling, and then you also earn interest on it. So if you have money lying out idle somewhere, why don't you make it work for you? This is a very good versatile tool to help you invest your monies. Now, next to money market fund is a fund called a fixed income fund. And to distinguish it from a fixed deposit, a fixed income fund is not fixed. It's just the terminology of the investments that are put in there. They have a longer maturity profile, the investments. But remember, you, the customer, are investing in a fund. So you can still get out of the fund, and within 48 hours when you request your money, it's also liquid. We are able to pay you. But the difference is that it invests in securities or investments that have a longer maturity period, technically above 1 year. Remember, for the money market fund, the investments all mature in under a year, and some as low as even a month or so. So those are the kind of aspects that we're looking at.
Maybe just to interrupt you briefly, I know as you present, as you take us through the investment solutions, there are customers who might be having questions for us. I would just like to add that they can post the questions on the chat. We have a team ready to respond, and we'll also have a Q&A session towards the end of the webinar. So feel free to let us know what you'd like more information on. Thank you. Christian, proceed.
Thank you, Milka. And that's indeed, please share your comments. We'll be able to assist you with answers. We want to make you live here as proper investors today. So we continue with this presentation. So I'm sure you're all aware about the fixed deposits. These are placements with the bank. Stanbic Bank is one of the biggest banks in Kenya. And as you've heard from Milka, actually also in Africa, presented in over 20 countries with over 160 years in operation. 160, that's a big, strong bank. So you can be assured that if you put your deposits, a fixed deposit, a call deposit, a 3 months deposit, whether in shilling or dollar, you are replacing your money with a strong institution regulated by the Central Bank of Kenya. So that speaks to the bank deposits, another option for you to invest in. Now, we look at government bonds, treasury bills. What are these? what are these government securities that we talk about? So the operation of a government relies on two sources of income. It relies on taxes to meet its budget, and when the taxes are not enough, the government goes and borrows money from the public, the investing public, and those are the securities that they call treasury bills and bonds. So treasury bills ideally will have a maturity below 1 year, and that's why you can see them again featuring in the money market funds. However, for the treasury bonds, which are longer dated, those ones start from 1 year all the way to the longest that I think is about 25 years. So how do they work? So you give your money to the government in the first instance when they come to the market. So the government comes to the market every month to look for this money in forms of treasury bonds, and every week in the shorter ones called the treasury bills. So every week the government is in the market looking for treasury bills, and they close usually on Wednesday of the previous week. So like the ones which are due for Monday closed today. So when you invest in those securities, what are you getting? You're getting the government of Kenya security, and they're also promising a return. So for example, we have treasury bills for 3 months. They're called 91-day treasury bills. You go, you open an app that the central bank has initiated called the DAO CSD. That's DHOW CSD. You download it from your app store, and once you have registered your credentials there, you link it to your Stanbic Bank account where you'll be paying from. And from what you'll hear from the next presenter about the app, you're able to settle. Settle means paying for that investment to the government, and when it matures, that money still comes back to that same account that you paid from. So we encourage you to take up the Omni app of Stanbic Bank. If you're a customer, we'll show you how to get onboarded, and for our first time listeners who are not Stanbic Bank customers, we encourage you to start downloading our Omni app, Stanbic app, from the Play Store. It's a quite interactive tool, and it's able to help you. So now back to the treasury bills. A 3 months treasury bill, you pay the government today, and in 3 months it pays you back plus your interest. Okay, so in the intervening period, what you do, you wait, but your interest is accumulating, and then after the 91 days you're paid. For the bonds which are more than 1 year, so for example, if a bond is a 12% the return that the government is going to pay, it will be paying you half of that interest every 6 months. Okay, so the first 6 months, so it is 12%, you'll get 6%, and then after that another 6%, so that at least you have regular income. And these are very good tools for people who are planning for income, approaching retirement, or looking for long-term income growth and protection. Those are very solid areas. So you will notice that I've spoken about primary and secondary market. So a primary market is where you go through the journey that I've just explained. You want to buy a treasury bill, and you pay the government directly on that first instance. But along the way, you decide, maybe I want to sell, I have a need for cash. How do I do? You can still sell those instruments through our app, and that is called the secondary market. So you can sell it before it matures, and you can also buy another one in case you got a windfall and you want to add up onto your portfolio. You can go to our portal and our app, and you are able to buy more treasury bonds or even sell, and you get your cash out. Now, the interesting part about this is that these bonds issued by Kenyan government are both in shillings, local currency shillings, and we have some in US dollars. The ones in US dollars are the ones you hear referred to as Euro bonds, and currently there are quite a couple of them, and we invest in those securities, and the government of Kenya has been able to honor its obligations on local and also dollar denominated borrowings, so they are quite safe from where we sit as analysts and professional managers. Now, the last category, but not the least, is a cluster of securities we call equities. These are what you commonly call shares. I'm sure you have heard of shares, Safaricom, you've heard of Stanbic Bank as well. So those are participations in companies. So you put your money, and you will be rewarded in the form of two items. You could get a dividend when the company makes a profit, and Stanbic Bank has been making profits. And the second angle that you get a return is the increase in the share price. We call that capital appreciation. So all these securities that I've just mentioned are suitable for various investors depending on your risk profile, and we shall cover that a bit later. But ideally, that speaks to the 4 kind of buckets of the investments that our listeners can look into, and we encourage them to download our app and start interacting with these tools, and you are able to grow your money and grow your wealth.
Wow, thank you so much for not using bank jargon.
Thank you, Mika.
Now, Christian, before we give the mic to Edward, I would like you to tell us more in terms of the returns that someone gets out of this investment. Because we know every time you put in your money somewhere, you want to know how much will you get back. So what are the returns like for these solutions? Tell us more.
Thank you.
And also comment about the minimum deposit that you need for this investment.
Fantastic. So for the money market fund, we have come at a very affordable price point. The money market fund is denominated in the Kenyan shilling, and the minimum amount is 1,000 Kenya shillings. Then we have the fixed income fund, and I'll speak to how it performs. The fixed income fund invests in dollar securities, US dollar securities, and the minimum to have this fund is $100. And anytime you're topping up, a minimum of $100 for the fixed income fund, dollar, and 1,000 shillings anytime you want to top up for the money market fund. So if we can look at some of the returns of these investments, we've started with the dollar because most of you are in offshore markets and definitely, possibly, most likely earning in dollars. Look at our current rates, just around 4.9, just slightly under 5%. And I think those are quite competitive returns. And you're not locked in, but the investments that we have done are long-term investments, but you can get your money easily because you're not buying those investments, you're buying into the fund. We create units for you. So you can come today and 2 months later you want to withdraw your money, or even sooner than that, you just go to your app and you request for your funds. So you can see our return is 4.91%, and that compares quite competitively. And I'd like maybe to hear from our viewers in the US, what are they getting in their current accounts or savings accounts in the US market. I want to believe it's less than actually 2-3%, and here we're getting almost 5%. So this is a no-brainer. You're planning to pay school fees for your kid, for tuition university, or you're trying to put a down payment for your mortgage to buy the 10%. Why don't you put it in an investment like the Stanbic fixed income fund and earn some interest, and when you get to your target, you withdraw it and you put your down payment or you pay that tuition fees. For the Stanbic money market fund, again, quite our biggest fund actually, accounting for almost 2.3 billion shillings. Here our return has been year to date since inception about 9.9%, which is still a very attractive return. And this is a very liquid fund, very short duration. I did speak earlier to money market funds having a maximum of 1 year in the investments that they make. In ours, the combined weighted average life of our money market fund is actually 6 months, in line with international best practices out there. Okay, you go to the US, Australia, you go to Canada, all the developed markets, money market funds have very short durations, anywhere between 3 to a maximum of 6 months. So we are quite in line in the definition of what a money market fund. It should be very liquid and able to pay you your returns when you need, without any shock in the valuation of your fund.
Wow, thank you. I think it's very interesting to note that with $100, I have a fixed income fund.
Absolutely, Mika.
And with 1,000 shillings, I have a money market fund.
Imagine you're buying into a money market fund that invests in treasury bills and bonds, whereas the minimum for investing in a treasury bond is 100,000 shillings if you go in the primary market that I spoke about earlier over here. If you went directly, the minimum is 100,000 for a treasury bill and 50,000 for a bond. So you can imagine you're buying a treasury bill which is going to mature in 1 year, and you want liquidity 2 months down the road. You'll have to start looking for someone to sell. Okay, so for small amounts it's a bit of a challenge because those securities ideally trade in big multiples, but here in the fund you're able to put your 1,000 shillings instead of 50,000 and start investing in that, and when you need your money you can actually get it within 48 working hours. That's 48 business hours, but those are working days.
Those are 2 working days.
2 working days, correct.
Wow, that is.
So you're getting high earning investments, so that have a high entry level, but at a low entry level in the fund, and you're getting the same return that you'll have gotten there, but also liquidity, and your capital is protected.
Good. That is very good to hear. The techie in the house, Edward. How has Stanbic made access to these solutions easier?
So thanks for that question. It's a very good question. I think one of the first things we need to recognize is that our customers are very far away from us, over 10,000 miles for some people. So if you think about it, another aspect for our customers is that you don't have time. So distance and time means if the distance is large and the time is little, the speed has to be significant. So what you need to look at it is then, how have we made it easy for you to invest? At the start, we spoke about our value proposition, one of which was bank easily and invest skillfully. So I'm going to demonstrate how through speed you'll be able to invest in Stanbic. So we started the shortest journey, which is this is what our current customers are able to see. So when you log into your app, you just click on the investment tab, and then you proceed to the features that are there. There are actually currently 3 features. 1, you can open a savings account with the bank. 2, you can invest in the unit fund trust that we've been taken through. And then finally, if you want to invest with the government, you go to DOSSD. Once you get your reference, you can actually pay for the same on the app. So I'll take you through a simple journey of how do you create a money market. So from when you log in, it takes about 8 seconds to log in, and then you create the fund, you select your account, which is within the app, accept our terms and conditions, and within no time, within a minute, you have your fund. Likewise, now the fund is ready. How do you put money into it? Because you're within the app has an account, you can send money to the US into your account, and then fund your investments. And if you have an M-Pesa line that you're operating from abroad, you can still pull money from it through mobile money. So we've given you the options, and this happens at a very fast speed. Then, as mentioned, how do you top up? When you put your money in, there's a 48-hour period for it to reflect. And then when you want to withdraw your funds, please note it's from Monday to Friday. So if today is Monday and you ask for a withdrawal, if you come on Tuesday 9 a.m., you'd actually find the funds in your account. So what you are seeing here, we've dealt the speed issue. Because the distance is long and the time is little, our speed is almost the speed of light. So this is basically how we've made it very simple for the customers to invest. So I'm happy that they can see you can bank easily and you can invest skillfully.
Wow, Edward, I think it's very interesting that you can invest in the money market fund just like a local client when you're out there, miles and miles away. I think that's very interesting. I think, Christian, will go back to you. And now that we know how easy it is to access the investment product, especially the money market fund, tell us more about the treasury bonds and the bills.
Thank you, Milka. So we'll go back to my slide, which speaks to that. So that's the slide that speaks to the government of Kenya securities, both in shillings and in dollars. So on the left side, you can see treasury bills. So there are 3 of them currently that are issued. One for 3 months, which is called 91 days. One for 6 months, which is 182 days. As you can see, it's in the red one. And then the longer one, which is 364 days, almost a year. That's what I said. Money market instruments have a maturity not more than a year. But our fund has a maximum weighted average maturity of just about 6 months, in line with international best practices. So treasury bill rates are not static. Okay, they depend on how the economy is prevailing, the government's need of money, and also underlying things like the level of inflation, the level of foreign exchange. And you can see from last year, when we had the shilling go to about 160, you can see that's the time interest rates were quite high, because the government tries to compensate for that by pulling in money from foreign investors to try and stabilize the shilling. So for that time, you can see interest rates were as high as around 18%. But since then, it has been stabilizing and currently running around between 8% for the short one, that's the 3-month treasury bill, up to about just under 10% for the 364, it's about 9.65%. So these are cyclical, they keep changing. Nothing guarantees that it will stay there forever. For our listeners, definitely you saw yesterday the Federal Reserve cutting interest rates by 25 basis points. The same thing will happen in your market. You'll see treasury bill rates falling down, as well as also the other products that are priced from the treasury bills, including loans. So this is cyclical, and it changes by the level of economic activity and economic indicators in the government, in the country, whichever country it is at that time. Now you can see on the right hand side, we have the dollar ones. We have given an example of 3 that are currently quite attractive, and you can see the rates also are quite high compared to US dollar investments, and that's why we encourage our listeners, our viewers, to invest in the dollar fixed income fund, because you can actually get an extra kick on your investment compared to what maybe you would get in your home country right now. So take advantage of these solutions. Edward has spoken about how to onboard, how to get the Stanbic account, the pay-as-you-go account, and then how to fund it. I've spoken about the minimum amounts, and I've also I'll try to on how we charge our expenses by the time we're giving you those returns. The ones I've spoken here, the 9.9 that you can see here since inception, or the 4.9%, we have already taken our fees. And what are our fees? Our fees are 1% for the dollar fund. We charge 1%. So by the time you're seeing the 4.9, we've already taken our 1%. And then for the money market fund, Kenya shilling, that you're seeing since inception, we launched this fund last year. Up to now, the return, if you had joined us, you'll have actually earned as high as 9.9%. That's what you'll have earned, and you've already taken out our fees, which is 2% for the money market fund. So after those figures, what else is left? So we compare like for like. So the 4.91 will only now deduct 15% withholding tax interest. This cuts across whether it's a bank deposit or it's a treasury bill. Even if you had gone directly to the treasury bills here, you'll still pay the 15% withholding tax for the government of Kenya treasury bills and bonds that are denominated in Kenya shillings. However, we have other investments called infrastructure bonds, which are very popular. Those are tax-free. Okay, you get your interest. If it's 12%, you'll get the 6% every 6 months, 100%. But for the ones which are called fixed government of Kenya securities, those ones you'll have to pay withholding tax on them, depending on the tenor. It can be 10% for under 10 years, if the investment is under 10 years, or 15%, 10% if the investment is more than 10 years, and 15% for bonds which are one maturity below 10 years. So you can be quite tax savvy by taking the infrastructure bonds that are issued, and that you can even buy them now in the secondary market because we still have them.
Still on you, Christian. Edward has taken us through how easy it is to access these solutions through Stanbic. Tell us why Stanbic? Why should I invest in Stanbic? Please talk to our listeners.
Thank you, Milka. Of all questions, I think our viewers, that's the most easiest. It does not take a rocket scientist to understand why invest in Stanbic. I think just look at it first. Number one, a trusted financial partner. It's been in operation through the group entity for 160 years. 160 years, people have trusted us to take care of their money, to grow their wealth. So you're working with someone who has experience in various markets, as you heard from all the way from New York to Dubai. We have representative offices or clubs, and in Africa in over 20 countries. So you're a trusted partner. Number two, we have been in the investment business for a long time. Standard Bank Group is known for investing skills. It's actually ranked the number one investment bank even in Kenya right now. So why will we go to the number two investment bank? Come to the number one investment bank. We have the right expertise, the right solutions, and we listen to our customers. And that's why we are here today, to teach you and also get your feedback on how we can improve our services. And number three, we diligently manage your funds. Investment is an art as much as it is a science. The issue is how to balance risk and return. You can take a lot of risk and lose your money, and you can, in the process, lose your customers. So we take our responsibility very seriously to make sure we are growing your money. We have a motto in Stanbic Bank under my division, which is called the Insurance and Asset Management Function division. We grow and protect what matters most. So in growing your money, we're investing it skillfully, as it has seen in the slides earlier. And then we want to protect it. We want to ensure your investments. And that's why you've had the issue about the home protections and other loans that you can, and other insurance products that you can take. So we are growing your income and also protecting what matters most for you. So Stanbic Bank should be an easy option. And I hope our listeners are already downloading the app to start enjoying these products.
Thank you very much, Christian. I think I'd want to take this opportunity to welcome the listeners who have just joined us. I can see the numbers are increasing, and we totally appreciate you. In this webinar, we are debunking or demystifying investment solutions in Kenya, and we look forward to hosting you. I think one of the key pillars of our diaspora banking proposition is bank easily. We have investment solutions. Edward, tell us, to those who are listening in, and they are not Stanbic Bank customers, how do they come in to benefit from these investment solutions? How do they onboard?
Thanks for the question. So I'd like to take you guys a bit down memory lane. If you look at Diaspora banking, where we've come from. So previously, what used to happen is we'd send you a paper through a PDF where you'd have to fill it in. You'd have to get somebody to sign it. You'd have to mail it. And by the time your account is opened, it's about a month and a half. What I'm here to tell you is we don't do that here. I keep my analogy of the distance and time and speed. So if you've seen what we have and you're happy with our offering, the easiest thing is first download our app. At the bottom there, you open an account. You can see we've actually created a product specific for you guys called Diaspora Banking Current Account. And in this account, it's a pay as you transact account. What that basically means is that you don't get any charges and there's no minimum balance. But of course, because you want to invest, you should be able to bring in money. So what is very important about this step is that you are actually opening the account on your own. So the question is, what do you require? You just need a Kenyan ID or valid passport. Make sure you have a KRA PIN. For the first time, I'll ask you to have a paper, but I'm not asking you to mail the paper. It's just for signing your signature because we need your signature. So you'll take a picture of it. In the process, you'll take a selfie of yourself. We've implemented things like facial biometrics to ensure that you are validating you're the person. So you can understand we've used the latest technologies to make sure that you're secure. So once that is done, the application will come to us and will be opened digitally. So what that basically means, at the comfort of your house, whether in Paris, whether in Texas, is it Minnesota? Have I said it correctly? Whether in all those cities around the world, our app does not care about borders. As long as you have internet, I can guarantee you'll go through the process and you'll be able to get your account. So that's basically, anyone who wants to join Stanbic right now, start the journey. Take out your phones, start the journey.
Thank you, Edward. Maybe you can also take us through, once you're a Diaspora customer, you have onboarded, you have received your account details. What else can you do on this app?
So when you receive your account number, you'll register for our app and you log in. The good thing, it's very intuitive. You can actually just go through it and you'll see the different features. So as you can see, the key features that do apply to Diaspora right now from a digital perspective is investments and payments. We've taken you guys to the investment part. However, on the payment side, we've enabled you guys to send money by M-Pesa, Airtel Money. You can send money to local banks through RTGS and PesaLink. And also, you can schedule your payments and still do SWIFT payments. So you can still send money back to yourself in the country of your current residence. And you've also put there airtime. You can buy airtime for your mother or father or uncle, whoever is basically saying, I'm short on airtime. But one of the funny things to say is that if you go to M-Pesa, you'll actually see that now soon we'll be introducing a feature where you can actually pay to a pay bill or you can pay to a till. What that means is that from the comfort of your house, maybe you're paying something, maybe medicine for your parent or something, there's something you want to purchase, you can do it at the comfort of your home. So we are accessing, you'll be able to access payment services from anywhere in the world, and you'll feel like you're home. And to give you comfort, I have not gone to the branch for over 5 years because I just use the app. So I'm just saying it already works, and welcome. Please download and start transacting.
Thank you very much, Edward. I think something else that I usually advise my clients when I engage with them is that use the Stanbic Bank account as a budgeting tool. We know black tax is real. Every time you send money back home to your relatives, or rather every time you're sending money, you're sending to your relatives. And most of the times you don't even account for this money. When you set a budget and say, I will send $1,000 to Kenya to take care of my family, put that in a bank account, and from there now you can disburse it through M-Pesa or the payment solutions that are available. I think that will really, really help you. When you reach the limit, you say, now I don't have any more money. I think that will also bring some financial discipline. Christian, we're not done with you. We have listeners on this call who maybe are even hearing about MMF for the first time, and it sounds like this big mountain. Who is this investor we are looking at? who qualifies to invest in the bond, in the bills, in the money market funds? Tell us.
Thank you. And that's a very pertinent question, because we're not all the same. We're not created differently. We have all different goals. So first of all, when you're starting an investment, you need to ask yourself, what is your risk characteristic? Are you the one who is fearless? We call those aggressives. Are you the one who's fearful to lose all your money, which is now the most, we call it conservative? Or you're in between, you can take some risk and you're looking for some income. Those are broadly the categories. So you have a low risk investor, then you have the medium one who can take a bit of risk but not too high, and then we have those ones who take now maximum risk, and there are products for everyone depending on where you are. But we do advise our investors to first take cognizance of where they are in their career journey or in their age, where they are in their age, and then to now overlap that with their characteristics for risk tolerance. Do they have high capacity or do they have low capacity for risk? And what do I mean by risk? Risk is the possibility that the investment that you have taken can go up in value or even down in value beyond some certain points. We call it in finance, there's both upside risk and downside risk. So, but ideally, most people focus on the downside risk, the potential that if I give my 1 million shillings or 10,000 shillings, it can go back to 9,000. So if you don't like that one, then you're definitely in the category of between conservative and medium risk. But there are those ones who say, I don't mind if it goes down in the interim, but as long as in 5 years it has gone back upwards, those are the aggressive type kind of risk takers, and those ones are best suited for the equities. The shares can change in value very fast, but they do give customers the highest rate of return, and this has been proven academically over a longer term period, 5 to maybe 10 years. You definitely grow your wealth faster through investing in equities. Those are the shares and other like mutual funds, offshore equities. For the low risk customers, a money market fund is perfect. Okay, as I said again earlier, we preserve capital in the money market fund. We preserve capital. That is not to mean that it is guaranteed. No, we preserve it by making sure the investments are in very short-term maturity products. I talked about the treasury bills and bonds, treasury bills, sorry, and saving account deposits and bank deposits, which typically in the Stanbic Money Market Fund is 6 months, just in line with what the world practices in the best markets. So we have adopted best-in-class capacity, whereby our return matches that risk. Okay, low risk. Is someone looking for a higher kind of risk, what we call medium risk, a bit of change in the value of the investment, but more return, then you go for the fixed income fund. Okay, the dollar one, and we're also creating a new one in shillings. So those ones give you a higher return, but you must understand that the value of the underlying investments can change, and that it filters through into the fund as well. But because we are experienced and professional fund managers, we are able to take action to mitigate those events when they occur, and we do that by diversification. Diversification means buying various instruments so that if one goes down, not all of them are going down, so the overall portfolio still makes a positive return. So those are the broad three categories I can say of clients or risk appetite for clients, and the products are there: money market fund for low risk, fixed income and fixed income funds and government bonds for medium risk, and for aggressive customers who have a high appetite for growth and can take more risk, you take the high risk investments like the equities. And not all of them are high risk, but definitely you look at you diversify there between what we call blue chips. Those are the strong, stable companies paying dividends consistently, and you mix that with growth companies we have just started, and that way you're able to get a regular income as well as high upside of your value of your shares going up by the growth companies.
Okay, thank you for that. I think what basically you said in a nutshell is that there's a solution for
all
everyone.
Correct.
Thank you very much. I think, Edward, I come to you. Kenyans in the diaspora do not like charges. They do not like charges. Tell us about the diaspora account. What is the minimum balance? What are the charges? Tell us more.
So on the charge part, I think the first thing we covered well is we've removed the burden on the cost for a customer opening an account with us. The second part is that we've removed the monthly fees that the customers used to actually incur. So they actually have a pay-as-you-transact account. So what that means is, for example, if they put 100K in their Kenya shilling current account, and they go for 3 months and they come back, they'll find 100,000. They'll only be charged when they are moving money from the account that everybody pays, by the way, in terms of sending to, say, the M-Pesa. If I'm sending you M-Pesa, that's what the same M-Pesa charge that they will pay. So the transaction costs are relatively low, in my view. And what we've just made sure is that we do not have the monthly fees that some of them, most customers have called as nuisance. Then beyond that now is that when it comes to funding, the good thing is that they can now move their funds, excess funds from the current account and move them to for example, the Stanbic Trust for free. But then they can still continue making their payments. But the charges are relatively low.
So you're confirming that the accounts are at 0 monthly fees?
Yes.
That's good. Noting that a Kenyan who is in the diaspora is very far, and sometimes they would require maybe assistance to invest with Christian here, or they would require, just to ask queries on what else can the bank do for them. How do we support Kenyans who are in the diaspora?
So I think the first part I can speak of from a technology perspective, we try to keep the app, we say, always online and always secure. And then we do try to, so from an always online, always secure is basically ensuring that anytime you want to access your app, you have access to the service. Because if the app is down, you cannot access your money. Then from a service perspective, we do realize that some things require talking to an individual. Diaspora banking does have relationship managers, and they will get back to you on the same. And we do also have a customer care line whereby if you raise an issue, we're able to get back to you. So that's how we've ensured that even though you're far away from us, you're able to basically access your funds anytime that you want and access support from the bank.
Okay, thank you. I think we've really gone through the bank easily pillar. We've gone through the invest skillfully pillar. I think maybe just to mention that we also have other solutions within the bank, in addition to what we've discussed today. Of interest, I know, to many Kenyans in the diaspora is investment in properties. We have solutions where you're able to invest under affordable housing at 9.5, which is a fixed rate. This is in partnership with a company called KMRC. You can be able to, as a first-time homeowner, you can be able to borrow up to 10.5 million in this solution. We also have Kenyans who would like to borrow with the same currency that they're earning. So today you're in Massachusetts, for example. I had to do that. You are able to take a mortgage in USD. That way you don't have to convert the funds. We also have in Euro. We also have in GBP, and the rates are quite affordable. We have gone as low as 8.5% in Euro. We also have insurance products where you are out there, but you have family back home. You need to insure them in terms of medical. You need to have education plans for your family members. We are able to support you there. We also have quite a number of Kenyans in the diaspora who have bought properties in cash. You have entered into a program where you have been paying for your property in cash, and now you have your title. But guess what? That property is not insured. I think about, is it a few months or last year, we had some floods that affected some sections of the country, and we had some properties that were affected in terms of destruction. So as a bank, we are able to offer these insurance solutions for you. You're able to insure your property and even the contents of your property. That way, in case of anything, the insurance company is able to pay that. And we have a subsidiary within the bank by the name of Heritage and Liberty that offers these products. I think at this point in time, I would want us to take a few questions. I can see we have some questions from the audience. Maybe we can take 1 or 2 questions. I think the first one I can see is from a gentleman called Dennis. What is affordable housing? Is it the ownership of properties built by the government through the housing levy? That's a good question. Affordable housing is actually an initiative between Stanbic Bank and the government through an organization called the Kenya Mortgage Refinance Company. where we are encouraging as many Kenyans as possible to be able to own property, especially if you have never taken a mortgage in the past. And this solution is available for a Kenyan who is based in Kenya and in the diaspora. We are very aggressive, and I think when we started the presentation, we mentioned that currently in the industry we are number 2. We have enabled thousands of Kenyans to be able to access mortgages and to be able to buy and build their homes back here. So in terms of ownership of the properties, we allow you to choose the property that you'd want to buy. You do not need to buy the properties that the government is building. You can actually choose a property anywhere within the country as long as it is the value is 15 million and below. And in terms of the loan, we are able to give you up to 10.5 million. It has a ceiling because it's capped at a rate of 9.5% fixed. What this product does is that your repayment remains the same throughout the term of the loan, and we can go up to 25 years. So that gives you the certainty that as long as you're paying your loan, this is the amount that you'll be paying, and it's a really good product. The only time the interest rate would change, because sometimes we get these questions from customers, is if you default on the payment. If you default on the payment, the loan defaults to market rate. But we can always give more information on this. I can see quite a long question. Perhaps could you explain more on the bonds? Are there any charges involved? And unfortunately for others, it's not just USD or Kenya shilling. It will be a different currency. Thank you for that. So maybe also looking at the exchange rate too and the transfer charges. I have an experience where I was charged twice on charges. I think the first part of this question, I'll give it to Christian. Tell us more in terms of the bonds, the charges, and what else. If I'm not in Kenya shilling and USD, do we have a solution for that? Then maybe the other question is in terms of the charges, where a customer has been charged twice. Edward, you can help us on that.
Thank you for that question. So currently we have the two main funds, because we're in Kenya, we deal in Kenya shilling, and also we have the dollar. Those are the ones that are issued by the government of Kenya. But for example, if you want to buy a euro denominated asset, can you get one? Absolutely, yes. We are able to bookmake for you. We are an investment bank, as you recall, and we are able to source that investment if you want in that particular currency. And we have got exposure across many African countries and many markets in the world. So reach out to us, drop us an email, and tell us which currency instrument you want in terms of a bond, and we'll be able to solution for you.
Thank you very much, Christian. Edward, you can take the next part.
So with the experience where the customer was charged twice on charges, the first I'll say is I apologize for the experience. And maybe what I can just tell the customer is that when such happens, we are happy to address the position and get you back to where you are. So if that has yet to be resolved, we're happy to take it up. You can email us and I'll take it up myself personally.
Thank you very much. Any other question maybe? This must be infrastructure bonds are tax-free, but what are the risks with them? Christian, I think this is for you.
Okay. So the typical risks on government bonds, not Kenya, government bonds generally, is a perceived risk of what we call sovereign risk. Will the sovereign, that's the country, will it be able to pay its debts? I think we have had situations where in other markets around the world and even in Africa, certain governments have been unable to sort their obligations to investors. So that's the number one, either sovereign risk. Number two is what we call interest rate risk. That is the risk that you have bought this bond, infrastructure, or what have you, even if it's not an infrastructure bond, at X%, call it 12%. Then next year, a newer bond comes out because of the level of interest rates in the markets have gone up, and a similar bond of a similar maturity is now trading at a higher rate. So what happens there? People would want the one which is paying more, and that is called interest rate risk. Those are the two main risks that I see for this. And finally, these infrastructure bonds do not mature at once. For example, if it's a 10-year infrastructure bond, you'll find that after 5 years or 4 years, you are paid down about 50% of it, and then after year 7, the other 30%, and on the last maturity on year 10, it pays you the balance 30%. So if you are trying to use this for a fixed income level, you're targeting to have 200,000 every month or 50,000 every month, then this can work for the first 5 years, but now you have to consider buying more after year 5 to ensure that you're still getting the kind of income that you had planned. Those are the three dynamics, but basically from where Kenya sits, I think the government of Kenya has been able to settle all its obligations, so I'll not say that they're risk-free, 100% risk-free, but we have an experience where the government is able to pay for its bonds.
Thank you very much, Christian. Another question we have is, do you have a tool or guide that can help me establish my risk appetite?
So we have a different session for this, and I know where that is coming from. So there's a scale that we have internally. If you look at our website, we can guide you on that. But ideally, there's a questionnaire you have to do. It asks you 4 or 5 questions, and if you answer them, it tells you where you belong on the risk and metrics. So visit our website. We're able to guide you there even before you open the account. In fact, our application forms on the website, which is Stanbic Bank, and then you look for the tab called Asset Management. When you get there, you'll see a tab that says Money Market Fund. Click it, and you'll get an application form. In that application form, there's a process that does a risk rating for you. So fill it honestly, and it will tell you where exactly you belong, whether you're low risk, medium risk, or high risk.
Thank you very much, Christian. Any other question? Thank you for organizing this. This is a comment. Could you please also share the performance of the unit trust, and please elaborate on the requirements to open an equities trading account, and also more information on what offshore mutual fund products you offer?
Okay, so I'll take all 3 questions. So on the issue of our share performance, yes, unit trust unit trust performance, yes, this is published every day on our website. Our website, just go to the Stanbic Bank website, look for the tab that reads Asset Management, and you'll be able to see our returns. So I did share in my slide earlier where we currently are, about 6.5% for the money market fund, and 4.9% for the dollar fund. That's the fixed income dollar fund. On the question of opening an equities trading account, yes, you can open an equities trading account through also this app. We have actually embedded that journey for you to be able to open it, and also on our web trader app, where you can actually open a CDS and start investing in our stock market. Kenyan stock market is actually one of the highest performing this year, so you might actually jump onto that opportunity and not get late to get to the investment journey. On the offshore mutual funds, yes, we have various mutual funds within the bank, Standard Bank Group, and also we can give you access to international mutual funds, which are focused on either fixed income or equities or a mixture of both. Again, we are happy to take you through these opportunities. Drop us an email, which will be shared at the end of this presentation.
Okay, thank you very much. I think we'll take our last question because of time. Can you elaborate more on the insurance on existing properties? I think I'll take that. That is what we call our home insurance. And this is an insurance policy that you take that covers the property itself and the contents of the property, if it is furnished or if you have family members staying in it. So basically what you do is that you contact us, you tell us the tentative value of this property, as long as it doesn't even need to be in your name, as long as it's your property. You give us the value of that property, we give you a quote in terms of what you need to pay, and then you pay in terms of annually. And this product is usually quite affordable. So I think that's what I can talk about.
Maybe you can also talk about the last expense. I can also speak about our life solutions. We also cover lives. So we have a product called Flexi Protect, which in case of a death in the family, that comes in handy to help you meet the last expenses of your beloved ones. So reach out to us. We'll give you more details on all these solutions.
Thank you very much. I think we are coming towards the end of our webinar. I'd want maybe the team to, put up on the screen in terms of the contacts, because I think that's the next step. One of the things we'd want to really, really encourage is interaction with the team. Kindly interact with us so that we can take you to the next level in terms of the solutions that we have, in terms of information, in terms of even helping you on board. I think before we close, I would want to just maybe get the last remarks or the key takeaways from my two colleagues. And I think we'll start with, I think Christian, you have spoken too much. I think we'll start with Edward. What would you like to say to the many people who have, listened to us this evening or this morning?
I think first of all, I'd like to thank them for coming, making time. And my hope, I look at these things, money is a long-term thing. So when I reflect, I'm thinking of, if I look out 7 years from now, I'd be very happy to hear that there's a customer one day who attended a webinar, learned about investment solutions, opened an account digitally from their comfort, started investing, ended up borrowing a property, and they came back 7 years down the line, and they come to Kenya a very happy person. So for me, it's the long-term view of our purpose, and it's basically we'll have achieved it if we've been able to serve our customers that well, that when they come back, they have a testimony that we've been able to grow with them.
So for mine, my parting shot is there's a saying that goes like, the best time to plant a tree was 20 years ago. The next best time is today. So if you have not started your investment journey, reach out to us on those contacts. We are able to guide you on this journey to grow your wealth. Thank you.
Thank you very much. I think I would want to take this opportunity to thank our viewers. And before I thank them, maybe it's just to say that this webinar came as a response to our queries, to the queries that we have been receiving from our customers. How do I invest? Apart from property, what else can I do? How do I go about it? What is DOCSD? And I'm happy that we've gotten an opportunity to take you through this today. And we look forward to more and more interactions with you. I would also want to encourage, I think, Edward, you've done a good job in terms of how do you open an account if you're already not in the Stanbic Bank family? How do you come on board? If you are with us already, what more can you do with us? Can you take up an insurance product? Can you take up a home loan product? Can we talk about investments? And I like what, Christian, you've said. The best time to plant a tree was 20 years ago. And the next best time is now. I would also wanted to add to that and say a journey of 1,000 miles starts with a single step. So everybody who is on this call has an opportunity to take up and grab something. And I believe we have all learned something. Something else I'd wanted to announce is that we organize sessions where we make sure that our clients are aware of what is happening in the market. We have a quarterly newsletter. I think we should be coming to you anytime from now. We also have a bus tour coming in December, late November, early December. And we basically just want to show you what is available in the market, especially if you have thought about investing in a property, or you already have a property and you want another one. I think you need to be part of this bus tour, and we'll be sending communication on that. And then finally, I think it's just to encourage you to engage us. Our contacts are there. Julian's contact is there. Beatrice, those are some of the relationship managers that we have within the bank. My contacts are there, and also the department's contacts. You can always reach us, and we are happy. In fact, there's a client who has said that they were charged twice. I think we'd want to hear from you so that we can resolve that as fast as possible. We are here to support you. We know you're out there and you're toiling so hard for every single coin that you earn. And that is why we are saying we are here to support you. Our promise is that Kenya is our home and we drive her growth. I think with that is just to thank you for spending your precious time with us, taking your time off your busy schedules just to listen to us. We really appreciate you, and we look forward to interacting with you much, much more. I think without much ado, I think we can end this session. Thank you very much to my colleagues too. Have a lovely day or a lovely evening.